And welcome to ETF Edge. This is your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. I'm joined today by Reginald Browne, GTS, and Tom Lydon of ETFtrends.com, as well as Matt Hogan of Bitwise Investments. He's out in San Francisco. That is the bridge behind him there, folks. The race to zero is ramping up. Charles Schwab announcing last week that it's going to zero commissions on equities and ETFs after Interactive Brokers essentially did the same thing. I just spoke with Charles Schwab himself on our air moments ago about the need to be competitive in this environment. Reggie, this whole race to zero debate seems to me like it's less about getting those commission dollars and more about keeping clients and increasing assets. In short, it's about scale at this point. What's your thoughts?
Well, I think another spin is it's about increased investor confidence and another log on the fire around transparency. Look, the ETF industry has done a tremendous job around innovation. This is now nothing more than gale force winds behind the ETF industry to get more assets and to drive investor confidence and lower costs.
Just on a question on the business itself, it seems like this is a little bit of a real shot across the bow to the competitors. We saw them all move, Ameritrade, E-Trade, all move down on this. Do you think, Tom, this could lead to more industry consolidation? Could this start something?
Well, absolutely, and I was surprised when you asked him, Bob, that he said that may be the case. I mean, they've got a pretty big checkbook, and when you think about companies like Betterment or Wealthfront, some of those robo-advisors, they may be free for the taking. Also companies like Robinhood and Acorn that have done a good job for this next generation of investors that run their portfolios on their phone. Now Schwab is clearly in that game.
So where does this end, Reggie? I'm thinking, I mean, obviously commissions are now zero, so where are you going to go from there? Schwab's got an enormous banking business.
They do.
More than 50% of their revenues are actually in banking, and they've got a growing wealth management business. You know, what else do you do here? I mean, do you offer higher interest rates to your banking clients? I'm trying to think of other ways that you could even ramp up the competition even further.
No, I really think it's about client engagement. You know, Mr. Schwab had said that there are other businesses inside of Schwab where banking and advice, and I think that's true for all the participants. There are other types of businesses inside that can capture the revenues as being shifted. But look, it's about client engagement. It's about growing the client sphere internally. I think these companies have it. You know, to understand how to pivot hard.
And how much, several $1 trillion in assets under management, obviously that's what you want to do. You want to keep the clients in-house.
Right.
One of the things we've noticed about these funds is they tend to be, these fund families, they tend to be very sticky. Yeah. It takes a lot for someone to decide, I'm out of here with Charles Schwab and I'm moving into Vanguard or something like that, right? Yeah. So you don't want to give them any excuse, essentially, to pull up and leave.
Yeah, and half of their income is from the financial advisor community. When you look at that and the loyalty of financial advisors that they've been serving for many, many years, they all benefit from that. Obviously, their clients benefit from that as well. And I think other areas as far as better execution on ETF trades down the road, we'll see that. Don't you agree, Reggie?
Well, I think the client experience is at all-time high with market access here. You know, getting midpoint pricing for U.S. equities across the board, ETFs, but also NMS securities. The investor experience is as high as it's ever been, and because that investor experience is so high, has allowed for the zero commission fee to occur in the marketplace.
But this has implications even across the ETF space. We've marveled 2,000 ETFs, 160 fund families, maybe 200 fund families at this point. We have been waiting for consolidation in the ETF space. When is that going to happen?
Yeah, it's capitalism at its best, Bob. Now with the new ETF rule, it's going to be easier for more and more ETFs to come to market. But as Reggie and I were talking about earlier, not all of them have the great products to bring or the gusto to get distribution behind it. We're going to continue to see more and more ETFs close as time goes on. And we'll see some rock stars develop in the years to come as well.
So you continue to see assets under management increasing in a small group. You think right now the top 10 fund families control 95% of the business, right?
Yeah, and that will continue unless we see changes in the marketplace. Hey, we've had a 10-year bull market. If there's some alternative strategies out there that may play well in the next 5 years, look for assets to flow in those areas.